Gold and silver are honest money. They're not just, we're not just talking about sound money. We're talking about honest money, because there's no fraud and theft involved. With fiat currencies, there is fraud and theft. Every transaction, with gold, the amount of time and effort to dig it up, mine it, refine it, mint it into a coin, and then buy something with it, it's an equal trade. You're trading something for something. With fiat currency, when you borrow currency into existence by saying, here's this house I found, I want to borrow $1 million, and the bank imagines $1 million worth of IOUs into your account, you pay the seller with those IOUs, it's a trade of nothing for something, and that's fraud and it's theft.
Do you think that we'll see gold-backed currencies?
I hope so, because Actually, I would rather have them use gold than a gold-backed currency. When you go on a gold standard, it just opens the door again for this whole scam to start all over again. If you are paying for things in grams of gold or nanograms or whatever it takes, anybody that says there's not enough gold doesn't know fundamental economics. They actually, if they say there's not enough gold, they don't know how to do division. I mean, if you look at the number, you could give every atom of gold in a single ounce of gold, a serial number that could be put in a vault, and as long as it's this one stable thing, and you have a number that is not something that a government can expand or contract at any moment, and it's not something that's borrowed into existence and then vanishes as it's being paid back, that could be used, and there would be more units of currency than currently exist on the planet with just the 1 ounce. However, if you were doing that with just 1 ounce, the amount of work and time and effort put into mining that 1 ounce wouldn't equal the amount that 1 ounce would buy. I don't know, 1-2 years, something like that. I actually hope they're a little bit late so that the crisis comes before then, because this would be the method for them to get everybody into it, and then you're trapped. Once we're all using central bank digital currencies, right now, they inflate the currency supply and they transfer wealth, but if they scare people too much, you can go into other assets. Well, once they've got central bank digital currency, if they don't want you to buy gold, they just won't allow you. The currency won't buy it. The currency is programmable. They can control almost every aspect of your life once we get on any programmable currency, where they can, if they don't like you, they can make it so that you can't spend any currency within a 5-mile radius, outside of a 5-mile radius of your home. If they don't want you to travel, you won't be able to buy airline tickets or take an Uber or pay for a hotel room. And once they get you into this, now I should have prepared and had this little bill, but in Taiwan, they came out with a note that was a temporary note to stimulate the economy. They printed a whole bunch of currency that had an expiration date on it. And so as it starts reaching its expiration date, nobody wants to hold it. Velocity picks up, but the value of its purchasing power diminishes. They can do, if they think they need to stimulate the economy, what they can do is punish you by charging you 10% on your savings. And if you notice your savings vanishing at this amazing rate, you're going to spend it before it vanishes. So they can cause, this is the one area that the Federal Reserve and the currency creators, they don't have direct control over it. That's the emotion of the public is what controls velocity, whether or not you feel good enough to go out and spend. So if they want you to go out and spend, they'll just punish you if you don't. Well, I don't know. The world has changed so much in the last 3 years that I just find it absolutely unbelievable. And I didn't believe evil at this scale existed, and it does. There's a lot of distraction going on. What I would urge people to do, I don't pay attention to all of it all the time. And what I do is I try to focus on understanding the system behind it. And when you are looking at the system and then where the economy is, so the economics and where the economy currently is, if you can hold all, that's one of the things about this book is I was trying to cram in a very small, easy to read, I mean it's not a real thick, intimidating, daunting book, and I try and do it in very simple language so that somebody can, if you understand how currency is created, the difference between price versus value, some simple economics and the current state of the global economy, and then you understand the differences between the 70s bull market and today, the vast amounts of currency floating around, the paper wealth that is floating around the planet. It is a blizzard of paper, and it'll all try and land on that same tiny pile of gold one day, and that will cause an absolute explosion. It's a wealth transfer that happens from the people that are coming late to the party to the people that got there early. But if you can hold all of these things in your mind at once, you sort of get a painting of what the future might be. Gold is real money versus national fiat currencies. There's no nation on the earth that uses money today. And people need to start differentiating between money, because money makes, currency takes. Money is something that propels mankind forward. It's honest, it's fair. Currency is dishonest, it's fraud, and it's theft. And when you look at the way currency is created, when we used money, when we used gold, the amount of time and effort that it took to go out and prospect, find a claim, develop that into a mine the ore, refine the ore, melt it down, pour it into a bar, melt those bars and mint them into a coin, that amount of effort equaled the amount of effort that you had to work for in whatever you did to accumulate the right amount of coins of real money to be able to buy a house. And so this work was equal to the work that you had to put in, which is equal to the work that it took to cut down all of the trees, dig up all the dirt to make the copper plumbing and the cement and things, and build that house. It was a fair trade of something for something. When you use fiat currency, it's conjured into existence by a bank. When you're buying a house, you take a piece of collateral. You find a home that you want to buy. This is my collateral. I want to borrow $1 million. The bank looks at your financial record and determines whether or not you're a good risk if you can pay this loan back. And when they say yes, they imagine $1 million worth of bank credit currency, which is reminders that it's not actual dollars in your account, at least according to the Bank of England. It's reminders that they owe you a certain number of IOUs. This is the thing that I started with my first book, was differentiating between money and fiat national currencies, because the national currencies are not money, and people need to start differentiating these two things, calling them by their proper names. Money cannot store value currency cannot store value. Money does store value. I've got a silver Pegasus coin on my desk that was minted in roughly 500 BC. And if you melt it down, it still has purchasing power. The silver in it, the content, still has roughly the same purchasing power as it would have had back then. They bounce up and down in a range, but precious metals are the only thing that have proven themselves over the centuries to be money, a store of value. If you go to the Federal Reserve's website or any other place and you look up the definitions of money, what are the attributes that money has to have? And even the Federal Reserve, the very first thing they say is it must be a store of value. And then they go on with the other things, a medium of exchange, a unit of account, and so forth. So a store of value is the most important thing. So if somebody thinks that their currency, their national fiat currency, the US dollar, the euro, the yen, the pound, whatever, If they think it's money and they tell you, no, 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 our currency is money, then ask them, does money need to be a store of value? Is that one of its functions? And they will say yes. Then ask them, is there inflation? If they say yes, then ask them, aren't those two things mutually exclusive? If it's storing value, how come prices are going up and it's buying less the next day, the next year? The way currency is borrowed into existence, national fiat currencies, they have to lose value. It is not possible for them to maintain their purchasing power over long periods of time. And it's just a function of the math behind borrowing currency into existence and promising to pay it back plus interest. And the currency to pay the interest doesn't exist yet. You have to borrow that in the future.